is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great weekend, folks. It's a TGIF. Don't make assumptions. Be yourself around others. The biggest assumption that humans make is that everyone sees life the way we do. We assume that others think the way we think, feel the way we feel, judge the way we judge, and abuse the way we abuse. We are afraid to be ourselves around others because we think others will judge us, victimize us, abuse us, and blame us as we do ourselves. Market-wise, let's take a look at it out here. We have the Dow Industrials down 160, NASDAQ off 75, S&P's down 24, gold contract up $6.90, traded at $1,279 an ounce. Silver up 7 cents, $17.34 an ounce. Platinum down $10 at $9.92 an ounce. Copper down a penny at $2.02 a pound. Light sweet crude down $1.49, $49.07 a barrel. Bonds, the 10-year note up 14.6, 131.17. 30-year bond up a full point, 168.15. Both notes and bonds, folks, all-time highs. King dollar up 638 ticks, 94.59. That's a counter-trend bounce, light volume. King dollar wants to run down to that 91.88 area. Euro's trading at $1.12, and the yen is at 106. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&P, let's take a look at it. What do you have? The bear suit's on, folks. Bottom line, S&P, the cash S&P this week, where'd we go? Wednesday, you got 2120. Bottom line, couldn't handle the highs that were generated out here on the May of 2015. Now, the top of that high is 2134. The bottom of it is 2120. And what you're going to see here, what do you have? You have a test of the lows of the high. You're going to have, we'll see, I have to do the volume at the end of the day. Bottom line, you get a rejection of the 2120. We're at 2091 right now. And what do you have? Guess what, folks? If we go over to the SPY, you get volume coming out of the market on a Friday on the way down. Really unusual. We take a look at, and the sum of that is. We take a look at the S&P. This is what you have with the SPY. SPY right now, we're down 254. You're down 74 million shares. That's after trying to get into a high on Wednesday at 66 million. That's a confirmation that lower prices are coming at us next week. Next stop down, 202.72. That's the swing low from the 19th. NDX 100. What do we have with the NDX 100? NDX 100, same type of setup. Big expansion of volume on the NDX 100. NDX tried to make a high out here on the 6th with 12 million shares. We're down with 25 million NDX 100. Also going to be start running to the end, to the bottom of the first trading range we're at, which is 104. Bigger issue is going to be now we'll get game on from the February lows. That's what the bigger game is on right now, folks. Gold contract. What do we have with gold? Gold wants higher price. We get free money out here inside the bond market. What do we have with gold? This is what we have. Gold right now is at $1279.30. You've done 146,000 contracts. You're in the higher range. The last high out here is 1308. We're going to go for that 1308. We'll see how it handles it once it gets up into that level. Bonds. Okay, so let's go to the notes first. This is pretty amazing. So the 10-year note You've done 1 million contracts, over 1 million contracts. You're at 131.18. You're basically, you took out this consolidation, and you took it out like butter, folks, okay? This thing just sliced right through it, had wide price spread, accelerated volume, and what that sets up right now, that's going to set up, 29, 30, 31, yeah. This is setting up a 134.18 inside the 10-year, which is just amazing, because a 134.18, by the way, would actually put us under 1.5. That'd be about a 1.4. Right now, we're at a 1.6 10-year yield, okay? So if you need a mortgage, go get it, because that means that the mortgages, 30-year mortgage is going to be running probably at a 3.4, maybe 3.35. Pretty amazing. The 30-year bond, what do we have with the 30-year bond? 30-year bond also at all-time highs. It's going to be an all-time closing high, I suspect, in the 30-year bond. We are at 168.17. Actually, let me put this up in the continuous contract, because what we had done is that there was one spike in the bond market. Let me just see if it actually got over it. Yeah, no, this is going to be an all-time high. So all-time closing high. Yeah, this is going to be an all-time closing high. 169.31. Bottom line, big numbers, folks. And if you take a look at the 30-year, what you're yielding out here, we are yielding 2.441. Pretty amazing. No two ways about that. King Dollar. What do we get with King Dollar? King Dollar's got a counter trend move out here today. You have it up 653 ticks. You have 21,000 contracts. This is what you have. We're at 94.51. This King Dollar had come down with 34,000 contracts, got into a lower low at 35,000. You're bouncing out here at 21, and we're at 94.56. King Dollar is making, it looks like a B to a C of a ABC structure on the way down. King Dollar wants to go after the swing low that was generated out here on the 3rd of May. That swing low is 91.88. That's on the shorter term aspect. When you actually bring this back, and I put this on a continuous contract, and this is where it opens up the whole ball of wax, folks. And what it is this, is that, you know, the 91.88 wants to get tested. If 91.88 does not hold, we're going to see King Dollar down at 88 very quickly. 88 is the area where King Dollar was the highs of 2008, 2009, and 2010. It's not there's a huge amount of support there, but I suspect we get some volumes at those highs. That was 3 years of trading. Bottom line, I expect that you're going to see it go there. We go over and we take a look at the small caps. What we have with the small caps, the IWM. IWM down $1.97 today. You get 25 million shares traded. This is not bad. You know, it's backing down. Volume hasn't exploded to the downside yet. Inside the Dow Industrials, the mover inside the Dow Industrials today, you have Goldman Sachs is down 2.3%, Caterpillar's off 1.9%, Boeing's down 1.8%, and JP Morgan is down 1.8%. Our phone number is 877-927-6648. Dow's down 164, NASDAQ down 77, S&P's down 25. You can expect more selling as we come into the close out here today. It's going to be a nasty close, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 157. You get the NASDAQ off 75. S&Ps are off 24. And percentage-wise, this is what you have, folks. The Dow Industrials are off 0.8%. S&P's down 1.1. NASDAQ is down 1.5. Now, that may seem like it's a lot, and it's not compared to what happened today in Europe, folks. Europe started out the day getting toasted and roasted and all of the above. You had the FTSE closed down 1.8. The DAX was down 2.5. Spain was down 3.1. Big numbers. If we go over and we just take a look at those quickly, what you're going to see is that they not only came down, but they came down with some real juice, with volume behind the move in an extreme way. The DAX was the one yesterday that was saying, okay, it's going to be a little trouble in paradise, because what had happened yesterday is that the DAX on the 9th yesterday had 108 million shares on the way down. So it was a big number. That was the one that was showing it like, and I was going over this last night on the air, and I was like, okay, man, this is a big number. I expect you're going to see more today, so watch how this works. The DAX is going into a lower swing point that had 85 million, and more than likely the volume is going to blow it away. I'll get this volume about another few hours. Bottom line is that what does that set up? That's going to set up the DAX run down to 86.99, which is the February lows. The February lows right now are game, folks. That's how this shakes out. Now, let's go over to the XAU and the HUI. So, XAU, HUI, they both went to new highs, gave it up on price. Couldn't hold price. XAU got to $94.19. Or $90.33 now, same with the way the XAU and the HUI volume gets calculated, folks. It never comes out until 3 or 4 hours after the market is closed. That being said, what you have is this. I expect you're going to have higher volume than the swing point it was going after, which was the May 2nd and 3rd. And April 29th and May 2nd. The April 29th area had 69 million in the XAU. I expect that we're going to have more than that today. So what you're going to have is this. You're going to have a higher high with volume. That's saying you're going to go back topside once again. The Gold Bugs Index. What do you have inside the Gold Bugs Index? Same type of setup. Gold Bugs Index traded to a high of 229 today. 241. You're at 230. The high that we're talking about is 236. I expect the same thing to happen there, meaning that we actually get over that high, lighter volume. And why? Because if we go into a couple of the equities, the way that you can do this to get an idea of, okay, where's the volume in the XAU and the HUI, is go into some of the larger weighting structures of the XAU and the HUI. So if we go to Barrick Gold, which is the largest weighting inside that, Barrick today has done 21 million shares. That's going after 22 million. So Barrick will do 22 million because we're at 21.9 right now, 21.9 million. Newmont, we go take a look at Newmont, what you have with Newmont, NEM. Newmont Mining right now did 6.8 million shares today, and you're dealing with, well, Newmont needs more. You're dealing with 9.3, and you're dealing with 8.4. We go Franco-Nevada, FNV. Now, Franco-Nevada is a royalty stock. Franco-Nevada, we're dealing with 1.1 million. We're dealing with 717,000, and right now we're at 788. So more than likely, we'll see Franco-Nevada do approximately about 850. The GDX, what do we have with the GDX? The GDX, which is, that has done 46 million shares, and that's going to need more volume. You know, that was getting up and over the 85 million. Now, what did happen yesterday coming into the close, which is just absolutely wild, inside the GDX, is that you had a large amount of buying inside the GDX, and what that was all about was to get the GDX to net asset value. You know, these ETF structures have to get to net asset value, folks. And what happens? The sponsor of the ETF goes out in the marketplace, buys the equities that are the weighting structure inside the ETF, and they were buying those at the close yesterday. Our phone number is 877-927-6648. We go take a look at the NDX 100 and see what the strength versus the weakness is in the NDX 100, and what you have. Endo Pharmaceutical, which has been a dog for a long period of time, that's down 8.5%. You have Viacom down 6%. You have NetEase down 5.5%, and Akamai Technology is down 4.7%. Those are some big numbers for a hit just on one day. Out of the 100 stocks, right now, you get 96 of them that just about in the negative. 4 of them that are not in negative. You have Walgreens, Boots, the drugstore, that's up 4%. Other than that, the rest of them, you get 3 others that are in the positive, and that's it. You have Costco is up 0.4%. Intel is up 0.4%, and Charter Communication is up 0.2%. We take a look at the indice volume. Now, the ETF volume is going to be higher. The indice volume right here, let's see what she's looking at. We're at 579 on the NYSE, and on the NASDAQ, we are at 1.4. Okay, so let me see. Yeah, 15, 24 hours. Yeah, so what we're going to have is this. The NASDAQ composite, absolutely is going to have higher volume. So on the composite, that is setting up that you have a high with light volume. You tested it. You failed at the 49.68. And that was just trying to test the April high, never getting to its high. Now what you've had a Friday. You have a Friday. Volume comes out of the market on a Friday, which bottom line is unusual in the summer. So what does that do? That correlation opens up that we're going to have follow-through next week, and I expect that follow-through is going to be fast, down, and dirty. Dow Industrials. What do we have with the Dow Industrials? Dow Industrials are backing down 146. If we go look at the diamonds, how that is set up, the diamonds had an expansion of volume too. You've done 3.3 million shares versus trying to make a high of 1.7. The door is never wide enough to get out, folks. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Sean, how are you?
I'm doing great, man. Yourself?
I'm doing good. It's a beautiful day here, so it's good.
That's a beautiful thing, man. Totally.
Yeah. And it's Friday, right?
It's Friday. The TGIF. It's Friday.
Exactly.
We're coming into the summer. It's a beautiful thing.
Nothing better. Hey, so I wanted to ask you, so I called last week. I got some VALE options.
Okay.
I got out of them. I had the September 4s. I got out of them when it went over 5. I made some money on them. And then I rolled them over in the September 5s.
Okay.
been taking a hit the past couple of days. I see it's going down today. A lot lighter volume.
Yep.
Let's see what you think.
Let's take a look at it. Okay, so it's Valley, folks. Okay, Valley is one of the largest iron ore producers in the world. The low is $2.13. The high is $6.92. And those numbers that I give out, folks, are year to year, because this stock used to be a lot higher. Now, this is a little rocket ship coming off the bottom in January, folks. It started out at $2.14 and went straight up to $6.26. Back down again, had another sign of strength on June 3rd. I think that's what Dave looked at. Nice run. That's where he got it. This is still nice, man. And what you have here, just stay right there. We'll take a quick break. We'll bisect and dissect this baby. You stay right there, folks. Dow Industrials right now are down 144. You get the Nasdaq down 70. S&Ps are off 23. Gold's up 570. You get silver up 7 cents. We're gonna be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with Dave from Boston. We're talking about Valley, V-A-L-E, which is the largest iron ore producer in the world. So when you take a look at this, you might have to take like a little more heat down to the top of that gap, which is 416, Dave.
Okay.
You know, but this is a nice expansion. You know, so what we did here, folks, you know, in the last couple of weeks, you go up, and we go up with 42 million shares, 35 million, makes a little high up there with 35 rather. And yesterday, you come down with 37. and today we get 19. And this is what I always like to see. What happens, folks, is this. On a pullback, if there's going to be volume, this isn't volume up the top because the top's a lot higher. You have the volume come out of the equity first, right? Then it's trying to get into the strength or trying to get into the swing low, and the volume contracts dramatically. And that's what you have here, man. So.
Yeah, okay. And I got the option, so I got plenty of time. I got till September, so we should probably be fine.
Nice. And, because this run, this very well, when you take a look at this, folks, okay, this is an equity like the rest of the commodities that got absolutely smoked, okay? This equity went from $21 in 2013 down to $2.10. So it's a 90% hit. Pretty hard to believe, actually. Bottom line, 90% hit. Even on the weeklies, though, you can see the strength on the weeklies. So this is just beginning to build cause. Actually, this would be in accumulation right now. This is, if you want to see something at the beginning of accumulation, folks, that's what this is. And this can stay down here for like a couple years, but guess what? In between $5 and $10, that's not a bad setup, man. You do that a few times, you get some action going.
Okay, great. Thanks, Tom. Sounds good.
Have a great weekend. Have a safe weekend, man.
You too. Bye-bye.
Thanks. 877-927-6648. Let's go over and take a look at some of the rest of the commodities out here today. This is what we had inside the commodity complex. Gasoline, unleaded, we're going to be having cheap gas again. I'm going to go through the oil market in a second for you. We have unleaded gas is down 3.5%. Crude's down 3%. You get wheat down 2.8%. Natural gas is down 1.7%. If we go over to the crude oil market, let's go to crude oil first. Okay, so what did crude oil do? Crude oil made a high this week of 52.28. Okay, nice spring topside, no two ways about that. What was unusual was this: is that on the 8th, crude oil went to 52.23. It had volume behind the move. It moved dramatically after the markets actually closed. From 4:30 to about 8:30, 9 o'clock Eastern Standard Time, it kept moving up. Then yesterday, bang, they hit it on the way down. Now what you're going to have is that now crude's on its way down to this 47.95 area. The XLE, folks, had been showing that it was getting tired. It had done a nice counter trend bounce. But when you look at the XLE, you got to remember the XLE was at $100 in June of 2014. It goes down to $49. It's coming right up to ice, and the supply line that the XLE is coming up to is vicious. So you get a failure this week, and the failure is going to be on price and on volume. So that's going to set up a run for the XLE down to the 64.27 mark. And we'll see at that particular point if, in fact, it will break that and get lower. Let's go to Mark in Fort Collins. Hey, Mark, what's going on?
Not too much, Tom. How are you doing today?
Doing great, man. Yourself?
Great, thank you.
How's beautiful Colorado?
Colorado is hot. We're in the 90s today.
Is it? Okay.
Yeah. It's cooking. It's dry and cooking, but it's not humid, so that's good.
That's a beautiful thing.
Yeah. Hey, I'm looking at a daily and weekly price and volume failure on the TLT if it closes today below 135.25. What do you think?
Let's take a look. So the TLT, folks, is the 20-year plus Treasury bond ETF. And let me pull this back. So I believe what he's first looking at, he's looking at the February 11th high. That was when it traded 133 to 135. You did 21 million shares. Today we've gone from 134, 135, and we've done 5.6 million shares.
On the weekly, it's like 77 versus. So now there's a higher high earlier on. Yeah. And I'm wondering if we're going to go after that or if this is it.
Okay, so seriously, the reason I'm laughing, folks, okay, is that because the bond market, okay, bottom line is the ever-ready bunny that just doesn't want to stop. Okay, so first let's bisect and dissect this. Then we're going to go into the bonds. Now, these are bonds, folks. These are the 20-year plus bond fund, okay? So when I look at this, you get 135.25, right? That's what you're saying. There's no doubt. what you're going to have, though, what you got to take into consideration on a weekly, is you see how you're over the past 3 months, and it's still hanging up there. It's like, okay, man, it's going to take another shot at it. You know, that's the first inclination I have, meaning that you're going to go after the 135.25 again, because there's no doubt, folks, this week we only did 30 million shares versus 77 million versus the high that's generated out there with 50 million. So the way that's set up is like, okay, yeah, you know, if you could close under like let's say under 132, you know, grab one of these other weeks, that'd say something. But you're way over all these highs. So that's telling me that it's going to get at least tested. And you got to, you know, 135.33, 135.25. Yeah, so it's tested. I suspect it'll get tested again. And this is so here, check this out. This is where I'm going with this. Now we got to go back to the 10-year and the 20-year, right? So when you go back to the 10 and 20, and folks, I love trading bonds, and bottom line is that I'm so happy right now that I'm not short bonds. It's crazy. So in the 10-year, you have just launched this 131.07. Now, what you do, folks, when a consolidation, you take the top of that and take the bottom of it, which is 128. It's like, man, okay, this wants to go up 3 more points, you know? So that's 134. When you take the 30-year, it has done the same type of launch. It's like, okay, man, that can go up that dramatically too. Do you know what I mean? This thing actually launched last week. Now it's launching everything. You know, then let's turn around and take the world rates. And when you take the world rates, guess what? Everything is going down, man. You know, I have no idea what's making everything negative rates, but it looks to me like, you know, something that is very hard to conceive on a fundamental basis of the Federal Reserve continues to basically say they want higher rates. Well, guess what? The market is dictating, and the market is not only saying they want higher rates, they're putting lower rates into use. And in a fast and furious way, too, man. So to me, bonds are still going higher and rates are going lower.
Okay. And then the reason that the TBT has broken down below everything, is that because is that a double?
That's correct. That's correct. So what you cannot measure, folks, you never want to measure the TBTs or the doubles or the triples on a chart from other swing points, because that everything has to do with the compounding and the defensive posture inside those, because they reset themselves each and every day. Cooking, brother. Have a great one, man. Have a safe one. You stay right there, folks. We're coming right back. Dow's down $136. Nasdaq's down 69. S&Ps are off 21. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 136. Nasdaq's off 69. S&Ps are down 21. And, of course, don't forget, folks, every trading day, Monday, Wednesday, Friday, we do live programming from 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, we do live programming from 7 in the morning to 6 in the afternoon. Now, all that programming you can get right on your cell phone. If you happen to be listening in your car radio right now, on your computer, remember you can bring us everywhere 24 hours a day right on your cell. You go to TFNN.com. You hit Tiger TV. As you do that, you're going to get a full TV view, HD TV, plus of course, audio also. As you come over to TFNN, if you'd like to test drive either one of my newsletters or both of them, the way you do that, you go to TFNN, you go to newsletters. If you'd like to test drive the Gold Report, go into investments newsletters. You can test drive the Gold Report, 30 days absolutely free. If you'd like to test drive the trading newsletter, which is Market Insights, you go to newsletters, go to trading newsletters. You can test drive that, 2 weeks absolutely free. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
Doing great, man. Yourself?
Very well, thank you.
Cool, man. So we're looking at the diamonds?
Yeah, you were starting to talk about that. I took advantage of that little bounce we had this morning, and I bought some July 178 puts on the diamonds, and I just wanted to get your thoughts on. I'm going to hold them over the weekend. It looks like we've got, a bit more in this, I would think, for a while, but just wanted to
you get some action. So the diamonds, folks, are the ETF structure for the Dow Industrials. Down $1.40, you're doing 3.5 million shares. And, this is where the confirmations that are coming in, folks. So the diamonds trying to make a high on Wednesday with 1.7 million. You're down on 3.5. It's a big number. It's particularly a big number because we're on Friday and we're summer trading, folks. So, your next leg down, I suspect you're going to probably get 175 to 173. 175 is the high of May 19th. 173 is the low, and that's on the shorter term basis. I think game is on right now, which is going to be really wild, folks, to watch this whole thing shake out. Because if you remember, in January, it was vicious. It was a one-way down. It took us all of, February, March, April, May, June. Yeah, it took us 4 months to get to the high again. And don't be surprised if it only takes us 1 month to get back down to the low again. So you get some action, man.
Sounds good, Tom. Have a great weekend. I'll talk to you soon.
It's a beautiful thing. You too, man. Thanks so much. Have a great one. Have a safe one. Let's go to Steve in Connecticut. Hey, Steve, what's going on?
How you doing again? I'm calling about SIL-J, the junior silver miners. Let's
take a look. So this is a pure fund junior silver miners. Okay, let me see who's in here. Let's see what we got here. Okay, so you get First Majestic is 18%, Pan American Silver is 10%, Mag Silver is 10%. So right there, we got 38%. Okay. Coeur d'Alene Mining is 5.6%. That's a real dog.
Okay.
Mag Silver blows up all the time. That's 10.7%. Silver Corp is not bad, but that can turn into problems. Okay, I got it. Okay, so let's take a look at it. So, one second. And when you're doing these ETFs, folks, you absolutely have to know the weighting structure. Now, inside of this, First Majestic is one of the strongest silver stocks, which is really cool. So that's 18.8% of it. Now, do you own this? You're looking to buy it?
I was looking to get into it. I think it's a little high right now, but
Okay.
depending on where silver's position is, I just thought, what was your thoughts on it?
Is there some reason you don't want to buy the individual silver stocks?
I do own a few. I do own a few in there.
Okay.
Great Panther.
Yeah.
I had on there, and a couple of the other ones. I owned a few and then sold a few. Because everything's going up and down so much. But I'm wondering if it's worth it to own this, or like versus the individual stocks, where there's more of a risk for that. One of that.
It seems
being heavily weighted that it throws it a little off.
No, it actually, which is pretty cool here. When I first looked at the ones that are in it, there's a couple of them that I really don't care for. But this looks like it's trading exactly like the HUI, the XAU, the whole market in general. So I suspect what's happening is that a couple of them are offsetting, a couple of the weaker ones. So it looks like a decent vehicle, man. The buy would be probably around 1276, 1256. You got up to a higher high today. Not enough juice. Where I'm going with this, Steve, is that if you're watching Tiger TV, it's the high of May 4th. You see that nice volume up there, man?
Yeah.
If it backs into that with light volume, you get some action, man.
But if silver hits into 20 or so, then we're going to see this thing go to 15 or 14, I'm assuming. What
has happened with silver is that it's actually the silver stocks that's pulling silver up. The silver stocks have been strong like bull, where the silver contract hasn't. The last couple of days we got some good some good volume, good wide price spread behind silver. But for some reason, it's the silver stocks themselves, they move higher without silver actually moving higher. So, if we get silver to move higher, great, they should move higher. But what has happened since January is that the silver stocks move first, and then what ends up happening is that the silver is moved after the fact.
Yeah. Oh, yeah, I can see that, especially with GDX and it's gold, too, as well. Well, thank you so much for your help. Have a great weekend.
Okay, man. Have a great one. Have a safe one. And as you're looking at those stocks, folks, now we happen to own this, too, First Majestic. That First Majestic is one of the strongest silver stocks out there. That's an equity that's gone from $2.45, up to $13.32. Now, that's failing out here today, too, and it's going to back down a bit. But that is a very strong silver stock. Let's go to Ed in Jackson, New Jersey. Hey, Ed, what's going on?
Good. I'm looking at Deutsche Bank and Credit Suisse and Barclays. It looks like we have a Lehman Brothers event happening by looking at the stock charts.
So let's take a look at it. You got Deutsche Bank, and we look at Deutsche Bank first. That the low is 14, the high is 35, PE is 14. Let's see what we got here. So this has a high volume low that's going after Deutsche Bank, which is 1478. And that's the lows of they've already broken the lows of 2009. This Deutsche Bank has, you know what I mean?
Right. Is there something on the horizon, you think, with the Greek exit or whatever they're calling that?
I don't. Deutsche Bank's been in trouble for a long period of time. And, as to a Lehman Brothers event, the difference of 2007, 2008 from where we are now is this, is that there's no doubt that these banks, Deutsche in particular, right, have been probably hiding problems for a long period of time, right? But what you don't have is that you don't have many more banks that are holding a bunch of crap paper that a domino effect happens. You know what I'm saying? So it's like their Federal Reserve in Germany, will be able to take care of Deutsche Bank very quickly. It's not the same type of setup that we had across the world in 2008. So does it want to go lower? Yeah. Now let's talk about Brexit for a second. Okay, so this is pretty cool, folks. Okay, so check this out. you have the propaganda on both sides, right? It's the elites that don't want, that absolutely want. Here, you stay right there. When we come back, we're going to talk about, I'll give you my side of this deal anyway. You stay right there. We're coming right back. Dow Industrials right now are down 116. The Nasdaq's off 65. S&Ps are down 19. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're talking with Ed from Jackson. We're talking about Brexit. So the vote of Great Britain, folks, to leave the European Union is going to be on the June 23rd. Now, something that, well, here's the yin and the yang of it. The folks that don't want them to leave are claiming that they're going to lose trade, they're going to lose money, and they're going to lose all of this. The folks in Britain that want to leave say, hey, we're not going to lose anything. And my take is that, in fact, they're not going to lose anything, and this is why. You got to remember something. The European Central Union, okay, what it means is like the United States. You can go anywhere, anytime you want, across borders. That being said, what Great Britain did was they were most smart to do is that they didn't go for the euro, folks. They still have their pound. And it's he who prints, or she who prints the printing press has the control. So they, right from the very beginning of not going in the euro, was saying, hey, we're not going to let a bunch of elite folks dictate to us and have us go in slavery. So that's the first part. The second part is a lot easier to understand. And what it is this. We have free trade agreements, and in Europe they have free trade agreements with plenty of countries that are not in the European Central Union. So the folks that are saying there's going to be a disaster, they're making the case that trade's not going to take place. Of course trade's going to take place. It's a no-brainer, okay? This is about control of people, and it's control of borders over there. That's what this is about. And they're saying, hey, I'm fed up. I'm going to, I think it's a smart thing to do. It'd be like us giving up sovereignty. It's crazy, man. I thought they were crazy to basically, go in the first place. So anyway, that's the take, brother. Have a great one, man. Have a safe one. But it's the Britain folks not going in the euro is one of the smartest things in the world. Because the bottom line is that once you go in the euro, so picture something, you have all folks that have never been elected making all the decisions. It's bad enough that we have the Federal Reserve making decisions and they're never elected, okay? That's not quite the same thing. But it gets pretty intense when you have folks that are not elected and you have huge bureaucracies making decisions. And what you have in Europe is that my take of Europe, they're in slavery, man. They're in tough shape. And Britain is saying, I want out and I'm going to get out. Now we'll see if, in fact, that's going to happen. Right now, the polls that come out this afternoon, and they're blaming, this is what's really cool. All the analysts are blaming the downdraft here and the downdraft in Europe on the poll that just came out. And the poll that came out, folks, is saying that more than the folks that want to leave Britain are 10 points higher, that if the election was held today. We'll see. What ended up happening, I remember very well when the Scots wanted to leave the UK. Bottom line is that at one point it looked like it was going to happen, and then you got to remember something. Power is taken. And when the power is already there, they're going to unload each and every barrel that they can unload to make sure that they keep the power, And we'll see where it shakes out at the end of the day. Market-wise out here, what we have, folks, is that you're going to have lower markets. We're going to have an expansion of volume. And what that's going to set up is that's going to set up lower prices Sunday night. And we'll see what type of an expansion of volume we get. The NASDAQ composite is the weak dog out here right now. You're going to have probably going to do 1.8, 1.9 billion. It's in another trading range now, a lower trading range. We're at the 48.92, 46.78 is game. And on the longer basis, it's game out here. All these lows from February of 2016 is game. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend. Have a safe weekend. Look forward to speaking there. Right back here, Monday morning, 8 o'clock. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.